Good morning. My name is Hallid Smith. I'm the founder of the Greenhouse Foundation. Our core focus is job creation, and we're here to help you grow your business. Today's topic is finance and understanding the numbers. So we're going to cover as much as what we can in the short time that we have. The session is recorded, so you don't have to take a lot of notes. We'll also share the PowerPoint presentation with you guys. Welcome. I will also give some time at the end to ask any questions that you may have. If you do have an urgent question, please pop it in the chat box, and I'm happy to answer it. I'll stop every now and then. I do tend to go through very fast. But I will stop every now and then just to have a look at the questions. For those of you that are here, welcome to the session. So we're going to try and cover some of the very basics in finance, also understanding how important the numbers is in your business. And we run many of these workshops every single month. We have face-to-face workshops, but finance is one of the most critical areas in a business. And I say it very often that we are not in business to be busy. We are in business to make money. And keeping track of the numbers is a very, very important part of any business. So we're going to cover as much as what we can so you can understand the language of money within your business. So we're going to look at some of the things which we're going to discuss today, right? So we're going to understand money coming in, which is income. We're going to understand expenses, the things that you're spending money on to deliver your outcomes, your services, and your products, the assets which you have, the things you own, your offices, your machinery, your building, and the liabilities, the people you owe money to. Okay, so we're going to look at how these things change. And remember, these things change every single month in a business. So we do understand that you might not be an accountant, right? But we think when you're running a business, there is financial decisions that needs to be made, and you as the business owner need to make those decisions. So irrespective if you have an accountant that is doing it or if you're doing it yourself, you need to be able to make financial decisions based on the financial information. So you need to understand it. Even if it's outsourced by an external person, your accountant is going to do your finances, is going to do your books. Make sure that you have all the documentation that is required for finance, but that person is not there to make financial decisions on your business, right? And that is something that you would need to do. So you need to understand how healthy your finances are. Are you making money? Also, how are you planning for the future? Because financial planning is planning for the future. It's understanding how much money I'm making, how much money I'm going to need, how much cash flow I'm going to need within my business, and how do I want to scale? Because scaling costs money. So you need to plan for that. And you need to understand what is your appetite for finance. If you're going to take finance, can you afford it? Right? And that's why understanding the numbers is so important, right? So we're looking at, right, keeping a record, keeping a trail, right? And when we look at the work we do business consulting, we run turnaround. One of the first things that we would do when we're approaching a business, we ask them for their financials because they're applying for turnaround through the Department of Labor. They're saying we are in financial distress. So we want to look at their financials. And what that does is it gives us a very clear picture of every aspect of their business because there is a paper trail. There's a paper trail. So we look at the finances, financial documents, and we're able to understand how the business is running. If those records are there, that's why it's very important, not for only assessing whether the business is profitable or not, but understanding appetite for additional funders. also understanding from an investor's perspective, how valuable is this business? Right. So there's many different financial ratios which you can apply to your business to understand where the business is, the business capital, cash flow, and how healthy that business is financially. And all of that comes from records. And this is why, a lot of businesses, they start out, they understand the very basics, and they go for a loan, or they go and speak to an investor, and the investor says, well, we want to understand where you are in your business. Give us the required documents. Give us your cash flow projections. Oh, what is that? Right? They don't understand how the numbers actually work. But when you're looking at understanding the numbers, it's all about risk. Right? So whether you're applying for finance through a bank, whether it's an investor, or you're taking out an overdraft facility, banks need to assess risk within the business. And the more information they are able to see over time, the lower the risk. The lower the risk, the less you pay. The more the risk, the more you pay. Right? And so there's lots of funding that is available, and we'll touch on a few of that today to understand the types of funding that is available, also the risks involved with those different types of funding. So remember, your records is there to track money coming in, to track money coming out. It's also there to be able to track how healthy things is going within your business, and also identify challenges. Because remember now, when you start your business, what tends to happen is you start, you're only a few people within your business. You first start with yourself. So you got to position yourself within your business. And as soon as you become very, very busy, what happens is you would tend to move into operations. So now things need to get done. Things need to get done. And you would spend a lot of time in operations, because now the work must get done. I must do my training. I must do my consulting. I must do everything. So I need to do the work. And this is where you spend a lot of time. The challenge is that after time, once you're spending a lot of time there, you will find a lot of inconsistencies. And I remember one of the companies that we were busy mentoring, it was part of a turnaround program. They were in the retail space. So in retail, they work with a lot of cash, right? They work with a lot of cash, a lot less than 3 years ago, which is surprising. Compared to 3 years ago, about 70% of the money coming in was cash. Looking at now, it's roughly about 30%, so a lot less cash than what there was. People are using a little bit more of the plastic, but a lot of money moving through that organization. And what your cash flow books, what your financials does, it allows you to see inconsistencies within that business. And we reviewed and we went back a few years, because this is what your financials are able to do. You're able to track progress over time, right? So you get a very good history of how things went, how things are right now, and also you're able to project, because this is how projection works. You look at the past, and you look at how much money has been spent on X, Y, and Z for marketing and this and operations and staff and all of these things. And this is the profitability. It gives you a very good idea to give you a projection what's going to happen the next year and the next year. So we reviewed we reviewed all the documents, just had one meeting, and immediately, and remember, this is a large organization. It's been operating for more than 30 years, established. Right? They had financial people within the organization, financial managers. They had chartered accountants, and they reviewed the doc. When we reviewed it, we obviously reviewed it from a different perspective. We know a little bit of what we're looking for, and in those type of organizations, there's a lot of products being moved within the organization, being stolen from the organization. They call it shrinkage and many other different names, but money was being stolen from the business. And the way we track that, after a short space of time, we identified that products was going out, of the organization, and was going out twice without paying, like truckloads of chocolates. And we came to this when we looked at, well, there was liabilities. The liabilities is the companies that needs to be paid. And Coca-Cola had a massive debt of like over R1 million. It's like there's something wrong here. You can't owe Cadbury's over 2 million rands. The products is coming in, they are being sold, money's coming in, there's profit on them, so you should have money to be able to pay Coca-Cola and Cadbury's. And then we asked the question and we went back because there is a trail, right? You can track the money. And this is what we did, and we've eventually identified where the problem was. The challenge is that financials documents needs to be reviewed monthly if you have to, right? Quarterly at a minimum. But when we went back and we look at where the challenge was, and now this company no longer exists because of the millions that was stolen from the business, it literally crippled the business. But the point I'm making is it should have been picked up a very, very long time ago, because when we went back, it started years ago, 3 or 4 years ago. It started little bits, little bits, little bits, and then it just started getting out of hand, in a space of 1 year, and that was enough to cripple the organization. So you need to be aware of the finances. You need to understand how to read your financial documents yourself, because where you see some of the funny business that's happening, it's happening with accountants and very professional people in organization. White crime is on the rise within South Africa and anywhere else in the world. We always hear of the serious crimes like murder and robbery and all of those things, but the white crimes, we don't always hear about it, but it is there. So we're saying you need to understand the numbers and understand how to read your financials and to be able to look for those inconsistencies. So your financials, very important, not only for banks. So the reason why they're required, they can see, yes, money going in, money going out. It's not really always about the volume, right? It's about, are you tracking everything? Because they get a very good picture of your business, how much money is being spent, or is money being spent in different areas within your business, and are you able to understand it and make decisions based on it. So they would normally require financials for 2 years. Why 2 years? Because they want to be able to compare year one with year two. Are you growing? Are you managing your finances well? Is money being reinvested? Because here's the thing, financial documents itself, right? When you doing your financial documents, remember, if businesses pay tax, right, they're required to pay tax. So when you go to your accountant, you will tell your accountant, you know what, who wants to pay a lot of money tax? So this is a job of an accountant, right? I don't want to pay a lot of money, a lot of tax. I would rather reinvest within my business so I don't have to pay a lot of money. So on your financials, right, it's not going to show a lot of profit, but you are reinvesting within your business, and that is very good. And if you're applying for funding or investments, they will see, yes, you are reinvesting in your business, but you do also require cash flow to run your operations, and you need to be able to make decisions based on your financials. So if you know in 2 or 3 years you're gonna maybe take on an investor, right? You want to expand, you know your business, you're able to run it, you want to expand, you need to then plan ahead, especially with your finances. So what do you want now? You want to show a profit. You want to show a profit, right? So instead of reinvesting, you're going to have profit that is there, and investors can see that it's a profitable business. Are you paying yourself a salary? This is things that people look at. You're running a business, right? How much money do you pull from that business? It's some of the first things when you go and look at how banks has changed over the last 5 years. They now all have personal bankers, irrespective if you're a small business owner. They have personal bankers. There's a lot of businesses like companies like Business Partners. The type of service they offer is very different to what it was in the past. No, you have that person that is really interested in your business, is able to get a little bit more involved in your actual business. So you have more of that type of relationship with that person, and he's more like also a financial advisor, is able to advise you. So understanding the documents and making sure that your documents is prepared and that you're also planning ahead within your business, very, very important. Okay, we've mentioned the ratios, how important financial ratios is. One of the they call it a quick ratio because it's very quick. Your assets, all your assets, everything that you have, inventory, material, stock that you have, that you own right now, based on the money that you owe. They're able to give just a rough ballpark figure. What is your appetite for finance? Can you take on more finance and more loans right now within your business? And this is why we say understanding the finances. It's a little bit of a juggling act, and that juggling is what you need to do at different times within your business. It's juggling that you're doing within your business. Also, there's many times that you require cash flow. You don't have it right now, but you need that quick finance now. You need to be able to have some stock, something that you can go, I can access this, or have partnership agreements with finance companies, and we will touch on that as well. Lots of finance available. There's never been so much finance companies for businesses right now, right? Not only banks. There's over 40 organizations, established organizations in the Western Cape that you can go and apply for funding. 24 hours, you get a response. Companies like Lulaland, Merchant Capital, Retail Capital, that is in the space now, that provides alternative type of funding, quick, that is available, because you must remember now the cheapest funding that you get is through government. Yes, through SEDFA, through NEF. These organized through DTI, through IDC. These organizations are there to offer finance for growth, for jobs. So if you require that finance, because it is subsidized by government, right? Job creation is a major problem in South Africa. We have the highest unemployment rate in the world. So if you look at money that has been set aside, if you've heard the recent budget speech, the president had made it very clear, right? Job creation is a serious problem, and a lot of money has been put aside for it to be able to support businesses, and a lot of that is funding. Yes. So they use funding available for you. You can apply for it, but the funding is linked to jobs. It's linked to jobs. They used to say, fine, I require this funding, right? But I can create jobs from it, and I understand how to manage it, how to manage finance. Right. And this is why understanding these ratios is so important, because they're going to meet with you. They are looking for companies that understands their business, that understands their numbers, that are profitable, that can scale, So when you look at the funding, the first thing they do, they ask you, what is it for? What is the funding for? What do you need? No, I need funding. I just want to grow my business. Just give me some money, right? No, it's not how it works, right? They want to know exactly what you're going to do with it. What you're going to do with that money. No, I need this. I need a piece of equipment. I need a property. I need money for X, Y, or Z. You need to tell me exactly where the money is going. And you need to tell me, based on last year, what you have done, right? How profitable the business is, how much money you're going to make, right? More now with this equipment. Because remember now, you made X amount last year. You made a certain amount of profit last year, according to your finances. You're saying you want this now, you want this loan now, right? Even though it's through SEDFA, yes, it's the lowest finance that you can get, but you need to pay it back at some point, all right? So yes, I can afford to pay this, the business, if I put this machinery in, I'm able to increase my sales here, this and this and this and this. My production can be increased, my profitability can be increased, and as a result, I'm gonna make X. Right. So that is the plan. That is the plan. That is the plan. And they want to make sure, yes, that you do have that very, very clear plan when you applying, because there's lots of funding available now. But remember, they want to understand that you have a plan on how you're going to use that funding. Okay. So very, very important. So we've mentioned this and we've gone through it so many times. We've mentioned it that we work for SETFA. We run support services for them, right? And a lot of them is businesses which accessed funding. They access funding. And now, because it's government, they've applied, they got a contract, they're now scaling very, very quickly. And they take on 5 million Rand and they get a 5 million Rand fund in their business. And in a year, 2 years, they are struggling. They're struggling to keep the doors open. And now we called in, right, to consult. Can we please go and see what is wrong with the organization and see how we can help them? So the first thing we do, we look at how they're managing their finances. We look at all the other areas as well, how they're marketing and all of that. But finance is a big area. And when we look at the finances, we see, well, this business was not ready for finance because it's not a profitable business, right? And this is why when we look at the funding that's available, right, a lot of the funding that is there, you're not maybe ready for it yet. You might not be ready for funding. And a lot of business, they think they're ready. They think, yes, just give me the money. Give me the money. And I will do it. I will multiply it in my business because I know what I'm doing. But when we look at the numbers, and there's a saying, numbers don't lie. There's that saying. I'm not sure if you heard it. Numbers don't lie. We go through the numbers. We go through the numbers. We go back, right? Irrespective if it's 10,000 or 50,000, small amounts that you're doing. It's not about the money. It's about how you're tracking it. It's about how you're tracking every single cent within that business. That is what we want to see. Yes, you're able to manage it, because if you cannot manage 50,000 effectively, how are you going to manage 5 million? This is the challenge. This is what we look at. We first want to see, how have you managed 50,000? You managed it very well. You keeping track of every single cent. Everything that is happening is being recorded. You did that. Was great. Now we know. We feel confident you're gonna manage 5 million, because then you're using the funds to multiply. Right? You're using the funds to be able to multiply. So very important, not only for understanding where you are, but where you're going. We run programs for the city. Right, we do a lot of work for the city of Cape Town. We run events. For those of you that has attended, we just had a networking session, right? And one of the key problems that the city has, remember, 29 billion is being spent every single year through the city, through vendors that comes and they apply for contracts to be able to do work for the city. Now they get the contract. But it's a 2 or 3 year contract. Remember, as a business owner, you assess your financial risk. The price you pay, the price you're putting forward that you're going to charge, your rates, it stays the same. You need to put in there, after 1 year, it's going to go up, and so on, and assess the risk. You have to assess your financial risk and what it is that you are charging. But what happens is businesses, they go in so low. What must government do? You're costing, you said you can do this job for X amount. So cost is a big thing. Lowest cost is number one in government, because they want a lot for a little. So you do your costing. Now you get the job, you do the job, right? Year one, fine, happy, buying equipment, new machinery, have to employ more people now because this is what happened. Right. And I remember very specific cases, and I mention it because it's so clear in my mind, even though it was many years ago. Right. The company used to do repairs, tire repairs, mobile tire repairs. And the city has over 40,000 vehicles, right? Just in the city, riding around, government vehicles. So when they have a puncture, you ride with your vehicle, you go fix it, and they can move on their way again. So mobile repair, and he got this very nice contract, more than 10 million rands. 10 million rands. Wow. Now he's looking at it as saying, I'm a small business, right? I have just two buckies. Now I need a lot of buckies. So what happens? What happens now? I did my costing for 3 years. I did my costing for 3 years based on my current expenses. Based on my current expenses, things that I need to pay. But guess what? Now I get a contract for 10 million. My expenses go up. Everything goes up. I have more staff. I have more people. I have more equipment, right? More maintenance. That everything goes up. And after the second year, not so good anymore. Third year, bankrupt. Yes, bankrupt. That contract bankrupt him, right? Because when he went in and his cost, it was so low, right? His profit margins were so low. He wasn't making money. Fuel price goes up. Everything goes up. Nothing is coming down. Everything is going up. Assess your risk. Who do we blame? Can we blame government? No. We blame you as a business owner because you need to understand financial risk. You need to understand costing. When you expand, you need to cost, because we come in and we do this all the time. We open tenders and we sit in the tender openings with the city, and we see that someone came in on 50,000 and someone came in on 500,000 on the same job. It was like, how is it possible? And we do understand that your expenses are very, very high on some of them, right? Your costing is high. You have more staff. You have officers to pay. So it is different, right? But you need to understand how to cost. And we understand that we're not saying you need to see in the future, but you have projections and you have consultants with SETFA that can advise when you're doing costing. If you're not sure, there's many online courses and coaches costing that can help you with your costing within government, within SETFA. Great. So please make use of those opportunities, right? Remember, you're using your financial data to plan growth, to plan equipment, machinery that you need, right? Products that you need. If you're in training and you're doing accredited training, more material, more accreditation. If you're in services, more services. What is it that I need to expand? What is it that I need to expand? So you're using that data to be able to manage your business and then plan ahead, right? So you need to understand the language of money, right? Especially with stakeholders, right? Stakeholders, if I come into your business, let's say, for instance, I'm an investor, right? So I'm going to invest in your business. So you guys watched Shark Tank and these investors that come and buy a piece of your business. So now I say, you know what? I want 20% of your business. What is it worth to you? What is 20% worth? So now you need to work out, right? So how do you do that? How do you do it? Because at the end of the day, you're building a business that is worth something right now. So if you ask yourself, if I'm going to sell my business right now, what is it worth? What is it worth, right? And how you do that, you firstly start with a financial document. So you start with the financial. This is the first thing they ask for. I want your financial documents. I want to know what it costs. What is it? How profitable the business is. That's the easy one, right? That is the easy one to do, right? What is the profitability of the business right now? What was the growth of the business? In other words, where did it start? They look at the industry and they look at projections. And what is your plan, right? Is the brand built? Do you have contingency? And how many income streams is there within the business? And what is that? How many different ways can the business make money? And that is important for an investor. Why is that important? Because they know the more income streams the business has built, the lower the risk, because this is all that investors want to see. And they want to understand, yes, what is the risk? So the more the risk, the more money they want to make. That's the decision they make. More risk, more money. Less risk, less money. But most of the time, investors are risk averse, which means they would rather make less money, but consistently over time. This is the thing. When you're speaking to investors, they're low risk, generally low risk. You do have a few that has an appetite, that's willing to take more risk, but most of the time they are low risk people, right? They love money, they want more money, and they don't want to take a risk. They will rather invest it in low risk. So rather putting Coca-Cola, they know, you know what, they're going to make a small percentage, but people are constantly going to drink Coke. Guaranteed they're going to drink Coke. So they know it's low risk, and they would rather put it there or put it in the bank on a fixed deposit. Guaranteed they're getting the money. But sometimes they're willing to take a little bit more risk, right? And these are the decisions that they need to make. So when they meet with you, they're getting that information from you. What is your understanding? And now they're going to determine, and you put a price, great. If it's very high, they assume, okay, great. There's risk. What is the risk? If it's very low, they already understand it's guaranteed. There's the history. Go back 2 or 3 years. We've had a 5% growth over the last few years, and we will continue to have 5% growth based on these reasons. Stable, secure, right? They get all of that information from you, and this is what they want. So when you're applying for different types of funding, they all want to hear different things. They want to hear different things from you because they assess differently. Different funders assess differently, and they make decisions differently on different information. So that is where they go through the document and they speak with you, right? Finding out what is wrong and why. I cannot emphasize how important this is, because this is what we do. A lot of the time we get called in, right, to assess, right, what went wrong and why. Right. So if your finances is down, you don't have cash flow, you are struggling just to get by and keep your doors open. Why is that? If you are making profit, if you're profit, money's going somewhere. It's going somewhere. And remember, it's traceable. So you can go back and check. Well, we're using a lot of waste here. I see you spending a lot of money on fuel here, spending a lot of money on this. We're losing money on this. You're able to go back and track. And that is why it is so important, because you are analyzing it. And we live in a wonderful age of AI. This is crazy, right? You used to have analysts. We used to have analysts, right, which charge anything from 3,000 to 4,000 rands an hour. This is the rate that they used to charge, because they're analyzing. They are analysts, right? So they go through a lot of data and they're able to pick things up. But it's so easy now with AI. There's so many AI tools. Literally, we can do it in 2 minutes flat. We take the document, here's the financial documents, here's everything. Go quickly, tell me what the issue is, right? And it's going to tell you in a few seconds. It is so easy. There's no excuse, guys. There is no excuse. It's made so easy. Our lives is being made so easy, right? With the tools that we have, powerful tools that is free. So they can analyze your documents very, very quickly and tell you where the problems is, where you are overspending, where you need to cutting down on waste, right? I remember one of the companies, I know I talk a lot. Let me just see if there's any questions, right? I remember one of the companies, they're in manufacturing. So they manufacture. Let me quickly stop. I'm going to quickly stop. Okay, busy. Okay, this quotation. Do we get tenders? Just a quotation. Do we get tenders if the training is done? Don't understand the question. Lamisha, please explain. What quotation? Do we get tenders if the training is done? Olivia, there we go. No more questions. Great. Excellent. So we look at one of the companies, right? So they manufacture burgers. Really easy. Company goes, they manufacture burgers. So we go into the business. You see, they're manufacturing lots of different types of burgers, but they initially started with a chicken patty And this is how they built the business. Now the business is grown, it's established. They built chicken patty, beef patty. That's it, bulk. That's it. That's their market. They're not selling a few. They're selling a big box, really big box, right? So you get a big box of chicken, big box, cheap, right? People buy it. And they use it, and that was their market. And this is how they took the market because there wasn't anyone making very big boxes in chicken, you know. And what happens with most businesses? They diversify. Why? Because now they're in Checkers, they're in Pick and Pay, they're making lots of money, and now people might want little fingers, they might want little nuggets, they might want animals because kids like eating chicken animals, crumb chicken animals. So why don't we make animals out of food? Kids will love it, right? So let's do all of these things. And this is what happens over time. You start diversifying. So when we come into an organization, we say, fine, you're doing all these things. What does it cost for each product, right? How much money are you making on each one? Each one. You have all of these different things. How much money do you make on this? How much does it cost to maintain this line? How much does it cost to market this line? What is the amount of sales that coming in for this product? What is your best product? What is your most profitable product? Right? So we do all of these analysis. We want to understand this business because we want to understand why this business is struggling. Remember, the business is struggling. So now we eventually figure out, you know what? They have a lot of sales. They're doing well. They have this range. The business look busy because when you're going there, when you're going into the business, it looks very, very busy, and everyone is busy, and they got contracts with nice corporate. Why they're not making money? And we look at it, great, you have lots of products. You like lots of different products. But when we look at it, when we break each of them down on how much does it cost for this machine, how much does it cost to maintain it? What does the machine cost? Well, that machine cost 2.5 million rands. Right? How much waste is there on that machine? Well, we waste quite a lot. What is the waste cost? Well, the waste cost this, right? How much are you actually selling? Well, I sell that. This is how much I'm selling. And what's the profit on it? Well, it's not very good. We don't have a really lot of units. A lot of it is standing on the shelves. People are not always buying it, and great. So here's the problem. All of these other products, when you do the maths, and this is the thing, you need to do the maths. So when you do the maths, you are losing money. All of these other products here that you're doing, right? You're losing money. You're losing money. They are taking money. You're not making money on them. So here's the thing. You're going to discontinue those ranges. These are the ones that is making your profit. So this is what you need to do. You have to move all of those things. Those are decisions that you're making in your business. Very, very important decisions that you're making. You're making a financial decision based on financial data, right, that you have within your business. And this is what you want to be able to do. Make those financial decisions that can turn your organization around, right? But if you're not the person to do that, this is why the way we looked, and I remember speaking to the owner, right? It wasn't his strength. And this is the thing, not everyone is good with numbers, right? Not everyone is good with numbers. Look, you need to get someone that's very good with it. You need to bring someone in. Eventually you did, you brought someone in to the business that was actually very good with numbers, and that person made a huge difference, in the business. But these are the decisions that you need to make. Get the right people in that can advise, especially when you scale and when things are moving very, very fast and you're getting contracts. You want to make sure that you are building skills as well, right? And financial skills is something that you need. So either you're going to bring it in, employ people within your organization, or you're using a consultant that can assist with that. If you don't, yes, you are in for trouble. You are in for trouble, right? I see there's maybe a few questions. Let's have a quick see. Is there any questions? Q&A. Let me just stop quickly. Just have a quick Q&A. No questions? Great. If there is, you can just post it in the chat if you have a question, and I will stop. I will also give you guys time at the end to ask any questions that you may have. So I'll give some time at the end. Okay. If you have a question, write it down so long, and I will get to it a little later. Identify bad actors within the company. Also bad areas within the business, right? And this is what you want. You're going to inspect everything. And this is why data is so powerful. It is so powerful, right? One of the other companies we worked with, they're in horticulture. I'm going to use this as an example, right? But all the examples is actual examples, actual companies, because we mentor lots and lots of companies. So they in horticulture, so they do garden maintenance. It's massive, right? The city's budget over 350 million for cutting grass, right? But the markups are very low. So now the companies, not doing very well. We come in, we say, we need to check everything. We need to check everything. So what we decide to do, something simple, we say, you know what? We look and we see the fuel bill is very high. The fuel bill, like, why are you spending such a lot of money? Oh, we have 13 buckies that goes around, picks up the people, picks up our staff, and then goes to the sites, different sites. They do their work, and then, okay, great. I'm going to say, but it's still very high. It's very high. We're saying the amount of fuel is used is very high. So we say, let's have a look at fuel. It might be worthwhile getting a tracker. So we get a tracker. We can check fuel, track fuel, all this and that. So we put it on the vehicle. Vehicles comes in for service, and we're putting it in. But we're not telling anybody. We don't have to tell anyone. So the trackers are in it now. We're tracking. Now we're seeing, because we want to understand what is happening. So we put trackers into the vehicles. Now we can see where the vehicle. Eventually we figured out, yes, vehicles are going out because the drivers, the supervisors actually take the vehicles, picks up everyone. Now we see, okay, they're using the vehicles at night. So we understand, great. They're also very hard on the vehicles. So we send them on eco driver training to be able to save the clutches, because very hard on the clutches and all this. We're saying it's very high. So we're now able to do things to limit it. And then we eventually figure out, you know what? So we find something else out through the tracker, that if you we looked at all the vehicles when they come in. Every morning they come in half an hour late, so with all their staff. Remember, they're bringing their staff in. So now we go and we look at, what does it cost? What does it actually cost? Half an hour to an hour late, plus they leave a half an hour early, right? Many times during the week, right? So now we look at something simple like that, just that hour. Remember, it's all your staff. Not only it's staff that is not working, it's work not getting done. It's work not getting done. So you're not getting paid for that work that is not done. So we look and we did some simple calculation, because this thing always comes back. Everything in a business comes back to rands and cents. This is it. Eventually comes back to rands and cents. So we look at, what is it costing me? 900,000 rands. 900,000 rands. 900,000 rands. Costing the business 900,000. Just loss of time. Just loss of time. Expensive machinery that you're hiring that's not being paid is crazy, right? Because you have 300 staff, right? And they're on different sites. So when we look at these things, it allows us to make very, very important decisions in our business, but it comes from those financials. So remember, you need to have a plan. So ideally, your plan is where you're going to be in 5 years. So hopefully you have that plan, right, on where you want to be. But it's the plan always starts with a number, right? So we're saying, yes, you have a goal. So goals are, what is it that you want for your business? I'm going to pay myself a salary. How much do you want to earn? But eventually, it also comes down to a number. So what is that number? And when I say a number, how much am I going to pay myself as a business owner? As a business owner, how much do I want to make? It needs to be a specific number. What is that per month, per year that I want to take out of the business? This is where we start. We cannot start without it, right? So hopefully you have that. So I want you to think about this, right? Let's say in 3 years from now, 3 years from now, it's a plan. Remember, it's a financial plan. 3 years from now, how much do I want to earn in my business? Now, there's a lot of people that run businesses, they don't pay themselves a salary. I don't understand how that works, right? They say, no, we're just putting it back into the business and getting the business. I said, look, if you have a business and you're not paying yourself a salary, what is the point? What is the point? You need to get a salary. Your time is valuable. You're putting time in, you need to get paid for it. So if you take yourself out and you look at what is it going to cost to replace me? In other words, I'm going to put a CEO. I'm not going to run my business. I'm going to put a CEO doing what I'm doing. They're doing what I'm doing. I need to pay that person to do what I'm doing. What am I going to pay that person? Oh, I'm going to pay maybe 30,000, 50,000 rands, is because I'm doing a lot. Well, great. So if your business cannot run and pay someone 50,000 to do what I'm doing, right, then it's not profitable, right? So this is why we're saying we start, what do you want to pay yourself, right, in your business? So you put that figures down. Great. Once you have that as a start, right, then you're going to move on. Oh, how do I make this happen? How much money do I need to make? How much sales do I need? How much marketing do I need to do to bring that amount of clients in? How much time is it going to take me? What is the staff that I'm going to need? Who am I going to need? Can I do it by myself? Do I need people? These are the decisions that you're going to make based on that, right? But it starts with the figure. So ideally, hopefully you've had your figure. Hopefully you have a figure, right? How much you want to make out of your business, So put the figure down. Don't be shy. Don't be shy. Put the figure down. Put the figure down, right? How much do you want to make? Put it in the chat. You don't have to be shy. We're only a few people here. We're all friendly, right? The reason why I want you to put a figure for yourself, how much you want to earn and take out of the business for yourself, is because when you put that down on paper, it's now reality, right? This is how we work it. This is how we do it. We start with that figure, right? 3 years from now, this is what I want to earn, right? And we move it backwards. And we do this because a lot of businesses, we work with businesses that take on investors. They are growing very, very fast. But we say, you're pulling money out of the business. But you're pulling such a lot of money out that you're crippling the business, because the business needs cash flow, right? So when you pull money out, that's regarded as an expense. But the business still needs to be sustained and running. So the business needs cash flow, right? So you need that figure. You need that figure before we can determine if I'm willing to invest in the business. Because I'm not willing to invest in the business if a person, the profit is 100,000, but the director decide, well, I want 100,000 per month, then there's no profit, right? So this is why we're saying I need to understand what it is that you want to earn and pull out of the business. Hopefully you know what that figure is. If you do, you can put it in the chat. You don't be shy. What is it that you want to earn? If you're not going to put it out, this is what you're going to do the weekend. Yes, this is what you're going to do the weekend. You're going to sit, take a nice stroll on the beach, right? Take a nice stroll on the beach, just yourself, right? And you're gonna think through the numbers. Take a book with as well. So you did 30K, wonderful, right? 30K, right? Whatever the figure is, whatever that figure is, remember now, that is now a cost that needs to be covered every single month within the business, right? Because this is why we're doing it. We're growing a business, which is a money machine that should be at some point be able to operate profitably without you. This is what we're creating. And this is why you create a business, because you're creating a money machine that will eventually operate profitably without you. If you don't have that, well, then I might as well just go and get a job, right? Then I go get a job. I give my time for money. I'm exchanging my time for money. You pay me, right, for my time, and you give me money, right? That's the choice that we have. So if we're running a business, I need to know what am I getting out every single month without fail, because you're building a business now that needs to cover that cost. Once you have it, right? So Lemisha, also 30K, great. Anyone more than that, put it down. It doesn't matter really. Whatever the figure is, it's irrelevant. What matters is when we have the figure, we're now able to move that backwards. We reverse it, we go backwards. And eventually we're going to figure out, great, what is it that I need to do every single month? What is the sales that I need to do every single month? And this is why when you look at financial targets, it is so important. I have a target. Everyone has a target. How do you run a business without a target? No, we're just running, just getting things done and just getting by. But we don't have a target. We need to have a target, something that we are aiming for, right? That we want, right? And guess what? Once we get it and we're making 30K, we're going to be happy with 30K because we're making 30K every month. Isn't 60K better? Absolutely. This is what happens. Now we get a 30K. Great. Now I got it already. It's realistic. I know I'm getting it. Right? Now I want 60K. So what happens now? Same thing. Same thing happens. I take the same that I've done with 30K. I now take the 60K and I take the 60 and I run it back. Okay, great. This that I was doing, the marketing that I was doing, the sales that I was doing, the people that I have, the equipment that I have, everything that I have that was okay for 30K is now not okay for 60K. I need to up the game now. Do you see? The game, I need to up the game. I need to up the game. This is why I'm saying when we go into businesses, we want this strategy. We want their plan. Where is it that they want? Now we can take their documents, we can take their financial documents, right, without looking at the business. And we can tell you, great, right? Where do I need to bulk up to be able to achieve this, the 50K now? So it's not always 30K, sometimes 50K. So let's say 50K. What do I need to do to get 50K? Well, I need to do this, this, and this, right? So we need to have that plan and it needs to be documented because remember, whatever plan you have, you need people, you need money, you need resources, you need customers, all of those things. You need all of them. You need all of them to achieve it. So you want to have a very, very clear plan to get it. And also you want to have a backup plan. So if that don't work, well, then here's an option here. If that doesn't work, well, here's an option here, right? But having a plan, right, lowers the risk and also makes it easier for you to achieve that. And this is what we do with businesses. We come in, we understand what their plan is. When they have the plan, they document it. Once they've documented, they tweak it because this is what needs to happen. You need to tweak the plan all the time, right? So you're using that knowledge that you have from the past, and it makes it very difficult for us, right? When we come into a business, we don't know anything about that. We need to figure everything out. So the best person to do this is you because no one knows your business better than you. So you're going to take some time. You're going to go back, understand your business very, very well, and then have very, very clear goals on what is it that you want in your business and how you're going to achieve it. And the reason why we do that, right? When you're looking at growth, right, you're going to need funding to be able to achieve that. And funding costs different things, as we mentioned. And you don't want to look for funding when you need it most. Because what's going to happen? Now I've scaled. Now I get a contract. Now I need funding. And now I need this equipment. Now I need cash flow now, right? What's going to happen? You're going to settle for funding that costs too much. Because here's the thing. Funding is available 24. You can get 24 hours, Lula Lend, 24, 48-hour finance, right? Without even looking at your financials. Yes. Oh, but what are they going to charge you? They're going to charge you a lot of money. This is how it works. They're going to charge you a lot of money. The quicker you get it, the more you charge. The longer you wait, right? Either no charge or very little. So this is what grant funding, free. You don't pay it back, but you're going to wait. You're going to wait years for it, and you might not get it. So you can apply for full grant funding, but you're going to wait, right? You can apply for SETFA, but you're going to wait a bit. You're going to wait for the finance. So you need to have alternatives, which is why you need to have a plan on when you're going to need it, because you're going to look at and meet with all of those consultants. within those funding organizations. Yes, now I don't need it right now, but you're going to look for it. You're going to go and meet them, understand the funding requirements, understand what they need from me. Well, I need this, I need this, I need to understand. What are they looking for? How do they assess risk? How do they assess risk? So we just formed a partnership with Merchant Capital. They say we don't need your financials. What do they need? They just want to know there's turnover in your business. So we formed a partnership agreement. You can apply online. In 24 hours, you get an answer. They give you cash flow. But they want to know you have cash flow. You have money flowing through your account. 50,000. You have 50,000 going through your account. You can apply for a loan and they will approve it in a short space of time. Do they charge you? Yes, they charge you, right? Is it quick? Yes, it's quick, but it's short-term finance, right? Up to 12 months. So in other words, it's funding to deliver on work. So I getting contracts. I just need to finish this work. I need to finish the contract. Then I get paid and I pay the money back. It's short-term finance, but it's not a long process. It's not because they require different things, right? They don't require the same things that banks require. So when you go to these different funders, you're going to ask them, what is it? What is it that you charge? What is your rate, your interest rate? They will say, yes, it's 3% or 4%, right? This is what the finance is going to cost you. And you're including the cost of the finance into your products and your services. This is the thing. If you're doing work for government or corporates and you're factoring in the cost of the finance, you aim for away. Because you factored the cost in. But now if something happens and now I need cash flow, I've done my costing, my quota's done already. My quota's done. I've got the job, I'm busy doing the job, and now I need finance. But the finance is costing me money and I haven't factored that in. What is it doing? There goes my profit. Profit is being eaten away because I now need finance. I don't have finance and I didn't plan. So this is why it is so important, guys, for you to be able to plan. When you access, go and meet them. It takes time. We understand, but now you're clear. You know what? So go and see. Go and apply. Merchant Capital. Go to speak to business partners. Go to NEF. Go to SETFA. Ask them what is it that they need. What are they looking for? What do they fund? What does it cost? How long does it take? Right. And then you understand what they need, and when you have the discussions with them, you will understand very, very quickly. They're going to come into your business. You have a very clear understanding of your finances. It's going to give you a better understanding of your own business. This is what it does. It gives you a better understanding of the finances because you now get to see what is it that they want, right? What is it that they want, and it's the best way to learn. So remember, you can apply. You don't need to take it. You don't need to take it. You don't need to sign. But you go and apply. You go and apply. And then once you need it, maybe a year's time, okay, now I need finance. Now I need it. Now I really need it. Great. You can go. You know what is available and you know what it's going to cost and you know how long it's going to take, right? And you know the likelihood of you getting it, right? Because you understand it a lot better, right? So very, very important. We say, having those statements, having those understanding those accounts, very, very important, and tracking money coming in and out. Remember, there's things like cybersecurity. There's really crazy things that's happening in the sector, right? Because unfortunately, with AI, right, also comes cybersecurity that is AI driven. So there's a lot of risk. There's a lot of risk that is involved within your business. So you need to keep track of the money coming in, money coming out, and also managing documents, very, very important within your business. So there's fortunately lots of tools that is available, makes it very, very easy. A lot of banks offers these services for free. So please go to your bank, find out what is it that they offer, support. Bank wants to support you. They want your businesses, right, to be successful, right? And if you take out loans, they want your business to be healthy so you can pay it back. So they are there to support you. So please go and speak to your bank managers. Find out what services is offered. Banks, there's a lot of competition. Banks competing with other banks, right? They want you. They want your business. So what is it that you're getting? What can you give me for free for my business? You need to access those opportunities. So when we go to businesses, right, the first thing we do, we want to assess their financial strategy, assess where they are. There is no one size that fits everyone. No, everyone has a different appetite. Everyone wants to grow at a different rate. Profitabilities of businesses are different. The sectors are different. So we need to understand each business uniquely before we can assist. So we have sessions with you, with the business owner, to understand what is it they want out of it, how much they want to make. But it needs to be very, very clear. Okay, when we start, right, the reason why we want the goals and targets written down in a document, because we want it to be clear to them, right? We also want the measures to be clear with regard to KPIs. So what is a KPI? A KPI is something which you can measure over time. So in a business, you have KPIs because you want to be able to track progress in all the different areas in your business. And all of that links to money. Money coming in, money going out, sales, right? Is things getting done within the business? And everything has a cost. And this is why it is so important to understand the value that people is adding to your business. And when you have that documented, we meet with staff, we meet with everyone in the business, and it's important for them also to understand the numbers, not just accountants, right? Because this is the challenge that accountants has. If you're not interested in the numbers, you are only interested in the operations. What happens is it's very difficult for an accountant, especially if you're going to put in fuel, you're in there, there's no slips, money's going in and out of your business without invoices. You're spending money on X, Y, and Z. And you, at the end of the month, you give all these documents and we give it to an accountant and we say, here, go, I need to do financials. All right. It's very difficult. It's very difficult. It's very difficult because everyone in that organization needs to understand the cost of doing business, right? There's a cost to everything. And everyone needs to understand that data and information, financial data and information, needs to filter all the way up and all the way down, right? And having that very clear goal, we insist on it. Our one pager, we don't need a massive document, right? We want to keep it as simple as possible. And the reason why we want to keep it as simple as possible, we want to make sure that we are on target every single week on what is it that we want to achieve. And that information needs to filter down to every single person in that organization. This is how it works, right? So we want to have the one pager. We want to have the very, very clear goal on that page. And we want to have the target and we want to have the KPIs that we're going to measure the target. It's really simple. It's really simple if we put it down on a one pager, because after what we do as mentors and coaches, we give you and help you put a plan together. And then we give you targets. We're saying, you're running your business. We are external consultants. We can't run your business for you, right? But we're going to give you things to do and we're going to give you things to measure. So if after 6 months or after 1 month, you've got a target here that you need to get X amount of sales here, you need to improve this year, you need to improve this year in order for you to achieve that turnover. And we come back after 1 month, well, we haven't done that, or I haven't done that, right? This is how it works. You cannot expect, you're not putting something in, but you want to get something out. You have to put it in, put all of it in, and now you're going to get something out. So we want to see and track that over time. And not everything works, which is why you want to be able to track it and see, okay, great, that really didn't work. Let's not do that again. You want to be able to make those type of decisions. You want to be able to make those type of decisions within an organization. And it's very important that you have it documented, the decisions that you make, right? And you go and review, was it a good decision? I remember one of the decisions that was made, with one of the same business manufacturing the burgers. He went out and, there was a opportunity to purchase a machine that fulfilled one of the processes, in his process. And this machine was normally very expensive. And he decided, what, he's going to buy this machine from China. It wasn't a full machine. It was a part of a machine, but he got it for very cheap. When I say cheap, he spent like 8 million rand on it, right? Which is normally like 30 million. It's a very big machine, and can really make a difference to the organization. So in his mind, he thought he's getting a massive bargain. He's getting a bargain. It is very cheap. He's got a very good machine, and with this machine, he can really double operations. It was really great, right? The problem is that the time when he bought it, right, they were on that verge. They were on the verge of scaling, on the verge of moving premises, and they needed cash flow. They needed cash flow in the business, and that cash flow was now obviously moved somewhere else. And when it eventually came, because it's a thing, it took them like 2 months just to get the machine. And when it got the machine, they realized, okay, great, they need to spend another couple of mil to fix the machine and get it equipped for them. So what I'm saying is that money that went out, it wasn't a very good decision, because eventually the business was expanding. They were getting contracts. They couldn't deliver on their contracts. They were already over indebted. So they took out loans for new premises. This is why we're saying those decisions that you make, financial decisions, is so important. And when we went back, we said, you know what? This is a very bad decision that you made, even though it made logical sense to him, right? But the time was not a very good time for your business. So we looked at it. We said, okay, show me your plan. This is your plan. Here's your plan. You want to achieve this. This is not contributing to that. This is actually doing the exact opposite. So this is why you have that plan, because the decisions that you make is to achieve those goals that you have, your short-term and your long-term goals. And that is why you have to ask these type of questions, and you have to review your finances on a monthly basis to assess financial risk. Yes, we understand having that specific targets. So hopefully you have those targets there for not just how much you want to earn, what is your turnover for your business, what is your rate of expansion. We ask these things, in a business. What is your breakdown? What is your break even? These are the questions which we ask. We ask directors. We want to know, what is your break even for your business? Your break even just to keep your doors or no profit. What is the cost of running your business? Simple question we ask. What is your break even for your business right now? If you cannot answer that question, there's a problem. What is your break even for your business right now? The cost, everything included, including yourself. Remember, taking all your costs. What is the cost to keep my doors open? You need to answer those questions. So these are the things that you're going to do, having those goals very, very clear. Okay. And when you look at those indicators within you, remember we said earlier, you can use ChatGPT to be able to go through your documents, right? If you look at the cost of getting an accountant to do it, the cost of paying an accountant every single month, for a small business, it makes a lot of sense. It makes a lot of sense getting an accountant to do it. But there need to be a relationship with that account, even though it's external. So what I would suggest, yes, have an accountant, but have sessions with that accountant so that accountant understands a little bit more about your business, and also understand risk, or bring in a financial advisor to be able to assist within your business. And here's the thing, most corporate companies, right, like Sanlam, all the insurance companies, all the banks, have these services for free. Financial advisors, valuable to have a financial advisor. So all businesses should have not one, multiple. You don't need to have one. You can have multiple advisors. And those services are free through your financial institutions, your insurance companies. You contact them. Can you please send me? You know what? They're going to love coming to you. This is their job, is to speak with and give advice on your. So use the services that is available. A lot of companies don't do it. They don't do it, and I don't understand why, because it is free, right? And they're going to give you advice. They're going to give you advice. They're going to give you investment advice. They're going to understand your risk and give you advice on the risk that you have. If something happens to you, what happens to your business? They're going to understand. They're going to make that very, very clear. So please, guys, go to your banks, go to your insurance companies, set up a meeting. Yes, it takes a little bit of time now and then, but set up regular meetings with your financial advisors, advisors, right? Uh, and share information about your business. Remember, their job is to make sure you're making sound financial decisions, that you understand risks that is involved, and the risk that appears in your business. I mean, if you don't know what you don't know, so you need to make sure you have people around you that is able to offer advice. So hopefully by the end of the session, right, you have some clear goals on what it is that you want, targets within your business, holes that needs to be filled, things that you need to do. Please write them down. Make sure that you at least have a plan over the next few days to be able to put these things in place within your business. We offer support, yes, but a lot of the work we would expect you to do upfront, right? And also understanding risk, your plan, the budget that you have, money coming in and out, and projections. Those are all things which we cannot do for you as consultants. We need you to be able to think about that very clearly in your business first. Okay, so we've covered that. We've covered tweaking. We mentioned the importance of data. Okay, so if you look at any area of a business, finance is one of the areas as well that is growing exponentially, right? Which means that if you're doing exactly the same thing in your business with regard to finance that you've been doing last year, you're now falling behind. You're now falling behind because one of the critical things, right? The questions which they ask when you're applying for finance and you're applying for funding, right? And you go to the companies, this is what we see every day. I need 1 million rands. I'm going to buy a property. I need 1 million rands. I'm going to buy an equipment. I'm going to buy a vehicle. I'm going to buy this. I'm going to buy this. This is what I'm going to use it for. If you go to that organization and you say, fine, this is what I'm going to do. I'm going to take the equipment cost, this piece of equipment that I need, it's to make chips, whatever. It's going to cost 1 million rand. I'm going to take that 1 million. I'm going to put it in the business, right? The minute you do that and you're speaking to the finance person, you have a very slim chance of getting that loan. And let me explain why. Right. Because this is what they're looking at. They're saying, fine, what are you going to do? If that is your response, you say, well, I'm going to take that 1 million rand. I'm going to buy that machine with it. That's what I plan to do with it. Immediately, you add a disadvantage. And the reason for that is because they know that by spending money on a machine is not going to operate by itself. There's a lot of things in that organization that is now going to change, that needs to change within that organization when you're putting a brand new machine in. There need to be training that needs to go. People need to understand how to use the machine. Work needs to be increased. Your marketing needs to be, because now you're going to increase capacity, but you need to be spending more money on marketing, right? Processes need to change now. Everything changes. I might need a machine minder. I might need another person. How is that going to impact on my business? So that it would be better if you were to say, you know what, I'm going to use 70% of that for the machine. I'm going to use 5% for that. I'm going to put 5% in marketing. I'm going to put 5% for that. I might need to put in a new quality management system over here. I might need this consultant that is going to put a new quality management system in that going to able to assist me. That's going to cost maybe 8,000 rand. And I'm going to do this and this. What does that do? What does that do? when you're applying for this, it shows that you have a very good understanding of your business. What is it that you're going to need, right, to be able to scale, and you're lowering risk. I might also need to explore opportunities of outsourcing the machine. So I might not necessarily have sales all the time to run through the machine, but I might also need to explore another income stream where I could outsource the use of the machine during downtime. I might need to also explore having staff 24 hours. So in other words, having a day shift and having a night shift. These are the things that you need to share when you're applying for the finance, and this might cost X amount. What does that do for you? It shows you have assessed your risk. You have taken you have tried to increase income streams, right? You've thought about your business very, very well. You've done a lot of that groundwork, and this is how you're going to break down the costs. And also, this is how I plan to pay it back. If this doesn't happen, there is ways that I'm able to pay the finance back. What does that mean? That means it shows a very good understanding, that you have a very good understanding of your business, and immediately they're gonna, you know what, this person is serious about their business, and they're going to look more closely at your application, right? So that's very, very important information. Hope I'm clear. Let's just see if there's any questions. Key performance indicators. Yep. So that's KPI, key performance indicators. It's things that you can measure performance within your business, right? It's also things that you can measure finance, money coming in, money going out, money being spent, targets, because the purpose of your key performance indicator, with the indicator, you have a target, right? So you have a target on what you want to achieve. So you have a target, you have an indicator, things that you can measure, and then you have a target on what is it that you need to achieve, right? And it's on all areas, everything that you're measuring within your business. So those indicators, very, very important, because that's what you're going to use to evaluate how many clients that I've approached, how many hours did I spend, X amount of hours, X amount of clients. How many hours do I need to spend with a client? There's the hours. Is it spent? Can I measure it? Yes, I can measure it. Right. So those are the type of indicators that I need. Sales figures, sales targets. I have 5 salesmen. They have targets. 6. They need each bring in 10,000 rands every month, 50,000 rands every month. Those are their targets that they have, right? And those are the things that I'm measuring. So you're gonna measure those things, and it's not just with regard to sales. Remember, all areas of business, all the areas, operations, waste, is targets on those things that you are measuring those. What is it costing me? Because there's a cost to it. There's a cost to everything. Remember, so if you have waste and you're not measuring it, how much am I wasting? How much am I? Because you need to make decisions based on numbers. So it's something simple. Like if I use the same company, because we're now speaking about, the manufacturing company, we use it as an example as well. So something which they use is crumbs. Now, I didn't understand this, but if you look at, like, on the burger, you have the crumbs that's on the burger. So now I'll ask them something simple. Where do you get the crumbs? Well, we manufacture the crumbs. And how much crumbs do you use? We use like 4 to 5 tons of it. It's like 4 to 5 tons of crumbs. That is a lot of crumbs. How do you make it? So, okay, great. This is how I made. We have this company, and we make it. What does it cost? Now we're looking at cost. We're looking at cost. So we want to know, what does it cost to make the crumbs? And I'm looking at it, I'm saying, that's a lot of money just for the crumb. I mean, it's not the burger, it's just the crumbs on the burger, right? So now look at, and how much do you waste? Oh, we waste quite a lot of it, because not all of it sticks on it. So what do you do with that? So now we're going through and that's a lot of cost. So if it costs you X amount, you have this, how many people works in this? These are the figures, these are the machinery, these are the people that work. Okay, great, wonderful. And what if you buy it? So now it's like, okay, great, I'm not making the crumbs, but there's companies that makes it. So what if I buy the crumbs? Is it cheaper? So now we do the maths, because everything comes down to rands and cents. So now we're looking, okay, great. You know what? It's actually cheap. Now we do the maths. It's actually cheaper to buy it. If we factor everything in, the time, the energy, the waste, the space that you're paying for now, you're using the space, because this was a question like, I need more space, I need another factory. How much is it going to cost? No, I need more space. All of these things, in the fact that, well, if I look at it this way, I need all of these things, the space, the time, the energy, the staff that I need. It's cheaper to buy it. It's cheaper just to buy it. Plus, I have no issue with capacity. If I need more, they build capacity and they supply. So these are the things that we're measuring. Indicators. You have indicators to be able to measure this over time. So it allows you then to make those type of decisions. Allows you to make those type of decisions, right? So we recap. I know we've covered a lot. We've covered a lot. So we went through very briefly the importance of having financial documents, the importance of understanding the numbers, money coming in, money coming out, understanding that your expansion and growth needs to be planned because it requires money. Understand that reporting is there for analyzing inconsistencies within your business, and you should be using that information to make decisions to improve operations and business and profitability. This is the whole purpose of it. So if you are operating for 5 years, every year you're going through your financials, every year you are improving efficiency, improving cost of delivering services, improving waste, improving everything. You are improving year after year because you are analyzing your documents. If you're not doing it, you have a problem, because this is the whole purpose of your financial documents. Your financial documents is not just there when you're applying for finance. A lot of people think I only use it for when I apply for finance because they ask me for my financials. Otherwise, I don't use it, right? But this is not what we're saying. Your financial document, you are reviewing your documents, you're reviewing your financial documents and management accounts, which is why you have your financial documents is yearly. Management accounts, every second month you can request it. And this is why you're requesting it. You want to review, you want to track, find inconsistencies, and use that information to analyze and make changes. You're using it to plan cash flow, finding cash flow solutions when you're going to need it beforehand, right? If you know you're going to expand, you're going to be employing more people, you're going to need office space, you're going to need X, Y, and Z. You're going to need to then understand those goals, make sure that it is very, very clear, and that you have it documented in a plan that is easy, right? So we're saying keep it as simple as possible, right? You can take your document if it's unclear. If you have an accountant that is doing it for you, you can put it through in less than 2 minutes. Put it through ChatGPT. Simplify it for me. Give me, do the analysis for me. It will give you it in a one-pager, right? Instantly and for free, and for free. Okay. So we understand how important this is. If you do need help with it, get someone in. Remember, we said make sure you're making use of a financial planner that is certified to do it, right? So you go to the banks. If it's a certified financial advisor, speak to a few, not just one. Share information where you are. Understand your financial risk. Make sure you are covered with risk. Make sure you are covered with risk. If something happens to you, you are covered. Okay. And we are done. Right. Let's just check if there's any more questions for those of you that has joined me. I will share the PowerPoint presentation. I will also share the recording. If you have any questions, you please ask your questions now, just to share some information as well on our non-profit organization, Greenhouse Foundation. We do offer support services. We do offer one-on-one consulting for businesses that want to scale. It's not for startup businesses. So we assist businesses that want to accelerate. So if you establish, you know your business already, and you just want to grow, and scale, we are happy to consult and assist you. We have also some online new venture creation courses, which include finance. It's a full-on course. You can go online and do it in your own time. We also have QCTO accredited training at companies, so we offer accredited training for your business, and we also have referral affiliate agreements in place between 5 and 10% referral for any referral for consulting, for training, or mentoring that you may require in your business. I'm going to share very quickly in the chat box at the bottom. I'm going to share a link to complete your online course, New Venture Creation, QCTO accredited, and then also please follow our channels on WhatsApp. We will share information on our webinars and face-to-face sessions. Thank you very much for joining us. Is there any more questions?